Hey everybody, welcome to the show. It's Seth as always. We're doing another reaction video. The reaction videos have done well, Paul. I mean, you've enjoyed them. Our patrons have enjoyed them. We've got a lot of reaction from our reaction. People were asking for this for a long time, and we're finally doing it. This is pretty fun.
They fun.
So this is obviously one of the big dogs. Now, Paul, we're gonna look at Meet Kevin today. The title of this video. And before you go in the comments and say, you just chose one of his videos. He's got 17,000 videos. Yes, I did
17,000?
I made that up. But I mean, I did choose one that I thought was provocative, if you would say. So the title of this video was Why Tesla Stock is Cheap. And he sees Tesla going to 6,000. It's currently at 600 or something. And so, Paul, I did preface this, folks. I mentioned this on the live stream a couple days ago. And that Paul is like, should we be careful in who we throw rocks at, Paul? And your response, I said this.
I was going to say, I thought you said I said. I'm like, I did not say that.
And what's your response to that?
I don't care. Here's why. Guys, we're trying to create our own channel. We're trying to create our own philosophy. If other people agree with us, great. If they don't agree with us, great. I'm not here. Seth loves the world of YouTube collaborations. Paul, I mean, I get messages. There's one specific patron we have who's trying to get me to do everything the way everybody else has. I don't care. All I care about is teaching the way we teach, learning the way we learn. And if anybody's open to it, great. If you're not open to it, also great. We've got trading, we've got momentum, we've got value. What I care about is I believe it is my duty. I could be wrong, but I believe it's my duty to call people out who I think are saying dangerous things. And I might sit there and say, well, come on, Kathy Wood's not dangerous, stock mode not dangerous. Yes, they are. They are committing financial manslaughter. They don't realize what they're saying to you is going to kill your money and kill your portfolio. They're going to make all their money selling to you, and they're not going to care when the market falls and crashes because they're going to say, oh, you know, I didn't see that coming. Fine by me. My goal is to sit there and teach a process that works long-term. If you don't have a process, this video, first time, I've never seen this video. Immediately when he says 6,000, Tesla to 6,000, I immediately say he has a lack of understanding of what stock prices are based on.
Okay, Paul. Well, here's Meet Kevin. I'm sure he's a nice guy, and he's going to prove to you why you're wrong. Here we go, guys. Here we go.
Hey everyone, Meet Kevin here. In this video, I'm going to explain why I'm so freaking bullish on Tesla that I have now 14,000 shares of Tesla. 47% of my portfolio is in
47.
Tesla. I've got a few scenarios here I want to run through with you, and you're going to see, okay, that's how we're coming up with a potential valuation for Tesla. Because right now, when you look at Tesla with traditional means, it feels overvalued. It feels pricey. But it's very difficult to value Tesla at today's metrics.
Seth, even if this
is it difficult to value?
Let's just ignore that. If you have any stock that's 47% of your portfolio,
go ahead.
You're nuts.
Charlie Munger says
that's just crazy.
If you have the right company, the perfect company, it can make 95% of your portfolio. But something tells me that. Whew. So let's first jump into this. The stock is currently at $670.
Yeah.
So he's got $9.5 million into it. Okay. For it to be worth 6,000, it has to go up 9 times, right?
He's going to show you all the numbers.
Great. I will say this, just from the high level, the current market cap is what, 700 billion or so? So that would take the company to a $6 trillion valuation. So keep that in mind as we go forward. 6 trillion. Based on historical PEs of 15, the company at that point needs to make in profit after taxes $400 billion a year. Let's double that. Let's say it's fine. We'll do it at 30 times PE. And remember, the only reason to justify a higher PE is more growth potential. So, really quick, if the bottom line in any tech company is even 20%, at a $400 billion profit number, they've got to generate $2 trillion in revenue as a company. $2 trillion in revenue. So this is why I say he doesn't understand how stocks work, because working backwards, even at a 30 PE, it has to generate $1 trillion in revenue. Okay? Those are basically the numbers. I don't have to watch anything more in the video. I'm just telling you the numbers that he has to assume for the stock to and this also assumes that Tesla never issues more shares, which they've doubled the number of shares, not through a stock split. They doubled the number of shares outstanding just by issuing shares. So they're going to stop issuing shares. This habit over the last 10 years of issuing tons of shares is going to stop. The company's going to generate $1 to $2 trillion in revenue. And they have to have a 20% bottom line margin.
Keep in mind, they currently only have a 21% gross margin. So they're going to take their gross margin and go, oh, you know what? Let's just double or quadruple or triple that one. And now the bottom line after taxes will be 20%. If you're not following along here, I am making every amazing assumption, and what you should be hearing is, well, that's not probable, that's not probable, that's not probable, that's not probable, that's not probable.
Let's let Kevin tell you how it is.
I don't even know if that's a word. But anyway, because what are we waiting for? We're waiting for batteries. We're waiting for chips. We're waiting for factory capacity. We're in a phase of hurry up and wait, right? And that is unfortunate because it does slow down growth, but it is a blessing because it lets me keep buying into Tesla cheaper and cheaper as people don't realize the long-run potential of Tesla. And look, I could be wrong. I'm just some dude on the internet, but I am so bullish on Tesla, and I'm so excited to share some of these numbers.
Never in history has somebody who's been bullish on the internet been wrong. In fact, people, usually when it's these people that are saying they're bullish, that is the time to be fearful. When the crowds are saying that things are good, you should be scared.
But all my friends on Facebook are saying everything's great, Paul.
I know. And your friends on Facebook are morons.
Let's keep going.
So I'm going to keep this simple. We're going to go through my bull case, my base case, what Wall Street's consensus estimate is and how that compares.
They put valuations to the nose in 2000 on all internet companies, in 2007 and all real estate companies and mortgage companies. They're never wrong.
I'm going to do a gigawatt comparison, and that's going to be special. Gigawatt. Okay, so the easiest way to do this is just start with production ramp rate.
Pause.
And so
Go on.
So let's look at this data first. You see this chart right here. In 2030, they're expecting the ramp up to be 16 million new car deliveries every year. Guys, let's put that in perspective. In the US last year, we sold about 17 million new vehicles last year.
Vehicles, total. Trucks,
cars,
vans.
everything. In the world, they sold 75 million. Okay?
Mm-hmm.
So what they're accounting for here is that, now granted, this is 2030. Those numbers will probably go up. How much? I don't know. Let's say the numbers go up 30%, which I think would be a lot.
That would be a lot.
That's taking you basically to 95 million new cars in the world. They're basically sitting there saying it's almost going to be 20% of the entire world's car sales are going to come from one company that has had a hard time so far. Is it possible? Yes. But your job as investors is to say, what needs to happen between now and then for them to be able to do that? He is banking his bull case on the best case scenario. As a good investor, you should sit there and say, where is it selling for where even if they don't hit their assumptions, they are still a good value? So let's proceed.
Here we go.
this is my projection for the Tesla ramp rate for how many vehicles they can deliver.
Oh, it's his projection.
In 2020, we delivered approximately 500,000 vehicles. I think that's going to go up to 950,000 in 2021. When Giga Berlin, Austin, Fremont, and Shanghai are at full capacity, each of these facilities will be able or fully capable of producing 1 million vehicles each. That means by 2024, we should have a marker of 4 million vehicles. If we produce or create 2 more facilities by 2025 and we start scaling those, I believe we could get to 6 million in 2025, or at least
Pause.
to 7.2 million by.
Can you
Go
tell
ahead,
me,
Paul.
can you look up how many cars Ford sells last year?
Sure.
New cars. How many new cars? Now, here's what I'm going to look at, guys. So Ford, guys. Ford is a company that's been around for 100 years. They're making electric vehicles. Now, you might sit there and say, Paul, you don't get it. Tesla's more than a car company. Okay. Then why is all their revenue coming from cars? How is so much revenue coming from cars if they're more than just a car company? Okay. Ford sold 4.2 million vehicles last year. At 2024, Tesla's going to be at 4 million vehicles, and he is projecting 42% growth. Ford is not projecting anywhere close to 42% growth. Not even close. Not even close. What is their projection? I don't know. But go up there and look right now on the internet. How many cars does Ford expect to sell in 2021? You might sit there and say, and your argument's going to be, Paul, they're not Tesla. If this is your argument, I get that. Turn the channel off right now. If you've subscribed, unsubscribe. Because what I'm trying to teach here is not what's possible. It's what's probable. And are you paying a low enough price to justify what's possible, not what's probable? Okay? If you believe in what's possible, then you need to go to Little League games right now and sign every kid to $1 million contract. Why?
It's
Because it's
possible.
possible they all become Mike Trout.
And you don't want to miss out.
And you can't miss out. You might sit there and say it's a ridiculous analogy. It's a perfect analogy.
Let's keep going.
2026.
So before you do that,
Go ahead, Mo.
Q1 of this year, they have delivered.
Who's they?
Tesla has delivered almost nearly 185,000 cars.
So Q1.
So that's Q1
multiplied by 4 is 750,000. So they're still low on his projections.
on his projection.
But it's still a big jump.
Yep.
But it's still low on his projections. They could ramp up from there. They could do 950,000 cars this year. So continue on.
Okay, here we go.
all the way up to my bullish thesis of 16 million cars by 2030. Now that's crazy because how does that compare to the rest of the world? Well, look at this.
Oh, look at this.
Toyota in 2020 delivered 14.3% of the world's market share, or of the world's vehicles delivered, which of 74 million vehicles delivered, Toyota delivered about 10.6 million vehicles. So saying that Tesla might deliver 16 million vehicles in 2030 is assuming that Tesla beats Toyota's market share. It's a very, very, very bullish. And remember, this is the bull thesis, so we're going to go to the more like nuanced theses in
I'll give
just
him
a
that. He
moment
did
and
say
kind of
that.
see what Tesla's projections might be as well. But if we go with a bullish thesis here of 16 million cars by 2030, and the easiest way to assume robotaxi revenue, full self-driving revenue, is, in my opinion, just to lump this into the car's revenue, because otherwise we're making way too many projections over how robotaxi is going to be monetized and full self-driving. So I'm going to say $42,000 per vehicle, fully monetizing autonomy. So if it's a $200,000 semi or a $20,000 car that Tesla ends up selling, I think the average selling price is going to be around $42,000 in my bullish thesis. This is then simple math. We multiply to get revenues. We have generally around 2.7 to 3% of cars that get leased at Tesla. We get services that are usually around 10%. I'm bumping that to 12% in my bullish thesis here. There's going to be a limitation or a risk factor for batteries, obviously, for this expansion. But my bullish thesis is Tesla easily getting to over $130 billion in energy revenue, solar, batteries, solar roofs, mega packs, endless opportunities for Tesla. And so I think Tesla's energy division will be 20+% of their car division in 2030. Insurance. Elon Musk thinks insurance could be as much as 25% of the value of the company. I'm going with 15% of the value of revenue of vehicles. I'm worried this might be a little...
Okay.
So in one situation, he said it was 10%. He goes, but I'm going to be bullish and call it 12%. But in this situation now, he's saying, well, total revenue from insurance was said 25. I'm going to go conservative. He didn't say conservative. I'm going to go with 15%. So why is he doing bullish in one area and conservative in another on the entire bullish at the top, Tesla bullish assessment? So that initially, it just makes me go, wait a second. If your job is to make a bullish statement, give us your bullish assumptions. Why is he all of a sudden questioning Elon Musk when Elon Musk says 25%?
Are you surprised his total revenue from energy is so high? It represents currently
I don't know.
3% of their company at the moment.
I mean, energy probably has a lot of growth potential, but here's the deal. Remember my statement at the beginning of the thing about $1 trillion in revenue? It would have to be 30 times profit. And 30 times profit's only justified, people, if you have a large growth potential.
Year to
You're
year.
telling me at $1 trillion in revenue, their growth potential is going to be double digits, high teens? Come on.
Let's keep going.
Little bit too bullish. So we'll see, and obviously the further you project out, the more risky things get. Now I'm including semis, robotaxi, full self-driving again in vehicle revenue. We'll talk about consensus estimates in a moment, not so important right now. But in my opinion, that brings Tesla to, and this, who knows, I mean, this could be 2030, I don't know, I don't think it's going to be 2029. Maybe it ends up being 2032, but this is coming, in my opinion. $1 trillion revenue for Tesla. If Tesla hits $1 trillion in revenue and we get to not even as bullish as Elon is with his margin, but we get to a 28% margin or an expense margin of 72% on vehicles, we could end up using regular margins that we see for some of these other items and 10% in operating expenses, which might end up being a little bit high. We would end up getting to a profit for Tesla of somewhere around $86 billion.
Jesus.
Take out about
Christ.
What's Apple's revenue and Amazon's revenue?
Amazon's revenue is like 400 billion or something like that, 300 some billion.
Okay.
He's talking 10
Sounds
years
good.
from now,
But
right?
wait a second. Look at the profit he's showing after taxes.
Yep.
$68 billion. Guys, his $6,000 price share assumes a $6 trillion valuation. That's almost 100 to 1 PE. That's like 88 PE ratio for a company that would be the largest company in the world.
Isn't their PE already much higher than that?
PE
And
is
it's
out of
but
control.
that doesn't matter. Go find me stable, huge companies that don't have much growth potential. Go look at Walmart. Go look at all the companies that are so. You're telling me this is going to have growth potential through the nose? Are they going to grow 20% a year at $1 trillion in revenue?
No.
that's for you to tell us.
I mean, it goes back to possible versus probable.
Anything is possible.
Yes.
I could go play the lottery ticket tomorrow. It doesn't mean I go pay $10 million for a lottery ticket.
Yep.
Oh, this is so bad.
And their
Percent
PE
for
right now
taxes.
is 667.
His bullish case has $68 billion in profit, which would be 80. Do the math. Is it 88 times? What's 6 trillion? 6.6 trillion. So guys, this is almost 100 times PE. Almost 100 times PE for a company that would be the biggest in the world. And by the way, car manufacturers tend to sell for about 30 cents per revenue. Now you may sit there and say, well, Paul, it's in a car company. Well, guys, of the $1 trillion in revenue, 70% of it's coming from cars. 70% of it's coming from cars. It's a car company. Or, okay, fine. Apply a 30 cents to the, so a 30 cents on the dollar for market cap for the car company. You're looking at, call it 50 cents on the dollar. For $700 billion in revenue, that's 350 billion of it. So now the rest of the company, he's valuing at $6.3 trillion. Man, keep going.
And if Biden jacks this up to 28%, we'll still have credits and loopholes and ways of lowering our effective tax rate, depreciation, and so on. I would expect an average tax rate of around 20%. That would leave us a net income of around $68.7 billion, divided by shares outstanding currently. Obviously, that is going to increase in the future.
Do you see how flippant he is about that? Obviously, it's going to increase in the future.
Doesn't even care.
Doesn't even care about that. Right, he doesn't realize how much that affects the company.
Yeah.
And my assumptions I just said about 100 times PE, that's assuming the shares count stays the same. If it goes up like it has in the last 10 years, you're at 200 PE.
They've doubled their shares?
They've doubled their shares outstanding without any. They did the splits, but that's assuming the splits already happened. Wow.
Mind is there will be more shares outstanding in the future. So we'll see how that ramps up. But if we just use the shares outstanding that we have today, we'll get to about an earnings per share of around $61. With a price today at $700, this means we're only pricing Tesla at about 11 times forward earnings.
Oh my God. 11 times forward earnings 9 years from now.
What does that mean?
Forward earnings are supposed to be for the next year. He's sitting there saying, let's put it this way. In 2012, I bought Microsoft at 9 times earnings last year. He's talking about 11.5 times, only 11.5 times earnings 9 years from now. That's like if I think Crossroads is going to make $100 million.
Your company. Yeah.
My company is going to make $100 million in 10 years. And that means that right now it should be worth $1.5 billion.
Oh.
Because, hey, I'm only valuing it 11.5 times 9 years from now's profit, even though we do $20 million in revenue right now. Hey, spoiler alert, $20 million in revenue, we don't do $100 million in profit. I know for some people out there who believe this math, probably would believe the math that you can bring revenue of 20 million and make 100 million on it, but that's not possible. Not probable, it's not possible.
The dollars we're paying today is 11 times forward earnings. And if Tesla ends up with a PE ratio of 100 in the future, it may not. 100 is really growth dependent. I mean, it would still have to be growing like crazy.
Be careful now.
This is incredible.
This is financial first-degree murder.
This is incredible.
This is financial first-degree murder.
If we go over here to get a 100
arrested.
PE ratio, we would barely have to be starting to see that curve of the S curve.
This is unbelievable.
And what I mean by that, is if we put in, let's say, 17 million
really
right here.
This.
See,
I know this is a bullish case. Somebody say it's just bullish case. No, this is stupid. This isn't just a bullish case. This is an asinine case.
Asinine.
This is asinine.
We'll keep going.
That S curve, that flattening. If we start getting that, 100's going to start being a little bit rich. So this could be
100's rich then.
Bullish,
Got it.
but
Now it's rich because it's flattening a little bit. But it wasn't rich before.
Okay.
Bullish on Tesla. Okay, so I'm being transparent about my bias here. But anyway, In that case, at 61 times earning, or at $61 in earnings per share, we could be somewhere around
Can we fast forward
to
the
bias.
He said bias.
Oh, bias. Oh, gotcha.
So this is, yeah.
$1,000 price in 2030 for Tesla, which if you invested today at $700 would be an.
This is going to be very, very, very mean. This is why we need a crash. We need to eliminate people like this. This is absolutely wrong. This is terrible. Kevin's going to lose a lot of money, and he's going to blame somebody else for why he lost a lot of money.
The suits, the president.
He's going to blame everybody in the world besides, 100 PE might be a little rich. That is absolutely asinine. This is absolutely ridiculous. If you believe this, you need to go throw your money in the toilet, give it to some charity because it'll do much better. Give it to the government. It'll do much better than buying into this crap. I don't want your subscription. Please unsubscribe. If you think what I'm saying is offensive, please unsubscribe.
You know, patrons, I love you nonetheless. You know I love you. Paul, we'll keep going.
Approximately 24.2% annual compounded rate of return. That's every year. If you buy today at $700, if this is true, every year you'd be printing pennies of about 24% on this stock, which is pretty freaking incredible. So this is a bullish thesis, and I realize this is very bullish, so I have to
give him that.
Sort of
he is saying bullish, but he said his bullish bias, though. So he does believe this because he said it's his bias. If he didn't believe it was what he believed, like, guys, I'm just trying to show what other people are saying. This is what other people are saying. I don't agree with this. He's not saying that. He's saying this is my bullish bias, so he does believe this.
A little bit, and therefore I have a base case scenario. My base case scenario, basically what I do is I assume Tesla only gets to 15% market share by 2030. And I also, because
only,
of that,
by the way,
I scale down
only to
their
15% market share. He just acknowledged that Toyota was the highest at 14.3%. He's saying if they only get to 15% market share, which would be the largest car manufacturer in the world. And by the way, they're not a car company, but he wants to be the largest car manufacturer in the world. There's more for everybody out there saying that. He is saying if they only get to 15%. That's like me saying, if I only get to $300 billion in net worth, that's pretty good for me. That would be the richest person in the world.
And can I make a point about this? So we think about Toyota's the largest car company. Okay. Because you can go to gas stations and pump gas pretty much everywhere in the world. Maybe it's not as vast as the United States. Just throw that minor concern in there.
Well, I believe that gas stations will start having electric charging stations.
That's true, but to the point of how we have it with Tesla in the United States, you think in Africa where they have cars, they're going to have charging stations around there?
It's still not that great around here. I mean, there are many places, even in Ohio, with Teslas driving everywhere. They need more charging stations.
Don't get them. Listen, I don't deny that Tesla.
But they have some work to do.
I just don't see how it gets to the biggest car company in the world if you can't
here's
charge
the thing,
your
though.
car.
The thing I don't like about this is, even if they do everything he's saying, you need 100 times PE to justify it. Do me a favor, guys. Do your research. Go find me the last time a company was 100 times PE for over 10 years.
Paul, this is research for young investors and new investors. Watching Kevin is their research.
Guys, I used to be in your boat. I know you don't believe that. I wasn't as extreme as this, but I believe technology was different. I believe you should pay a premium for technology, and I didn't care what that premium was. I used to be in your exact same boat. And then the .com crash happened. And I was fortunate. I didn't lose 60% of my money. I still lost a lot, though. I didn't lose 60%, 70%. The NASDAQ fell 83% from peak to trough. 83%. Before 9/11, it was still down 60-some%, and then 9/11 took it back down and took it down to another 15%. I used to believe the same garbage. And I realized one thing. A dollar is still a dollar. A dollar in profit is still a dollar in profit no matter how it's generated. Would you pay more for that dollar if it has more growth potential? Yes. But to say the largest car manufacturer and probably the largest company in the world be worth 100 times profit as that's a little rich.
Mm-hmm.
Keep going.
Insurance revenues and their leases and the others. I keep margin largely the same.
Of course.
And everything else pretty much the same, except I only use 70 times earnings in the future.
Oh, only.
So we have a lower EPS of $45, and I project out at 70 times in the future to get to about $3,200 per share at a future value in 2030, which would give me an annual compounded rate of return of 16.44%. But let's see how my projections here compare to Wall Street projections, because keep in mind, my crazy bull thesis for Tesla gives Tesla a market cap of almost...
It is refreshing that he's calling it crazy, and he's using math. At least, how many channels do we see? They don't even mention a damn market cap. I mean,
you're right. You're right. I will give him that. You're 100% right. He is using some math. And that's why I always tell people, when people always ask me for my stock analyzer tool, I go, guys, garbage in, garbage out. Just like real estate, when people tell me like, oh, look at my Excel sheets. Okay, well, let me change the Excel sheets real quick and make it look better for you. You can make any assumption. That's what the art of investing is. Probable versus possible, right?
What's Paul saying about making it better is like if you have a real estate deal, saying rents are 800 instead of 550, all of a sudden it can become a magical deal.
Just like here, we're gonna go from 21% gross margin in the car to 28%. Even though that 21%, 7% of it was from the government. That's now going away.
Let's keep going.
$7 trillion. I know that sounds insane, but then again, I'm also the dude who has 47% of their money in Tesla stock. So I better be freaking bullish.
And
He just showed his bias.
Yeah, he did.
He's saying
basically
that.
a
He's
cheerleader.
saying
I get that, but it's just showing like
He's a cheerleader.
that's a cheerleader. Like that really is a cheerleader. He needs this to work out.
Yep.
Here we go.
And he, by the way, he
So,
thinks
yeah.
now he'll be worth $100 million just from Tesla stock, assuming no dilution. Tesla's going to all of a sudden go from crystal meth addiction of printing shares to all of a sudden going, we're done.
Price target $7,000 or $7 trillion market
soon?
cap. Either I've lost my mind or I'm going to be close.
Oh, you lost your mind.
And even if I shoot for the moon and miss a little bit, I'm still going to have some beautiful
And
attorneys.
he has
coming
no
out of
idea what
there.
history has shown.
Sounds good, bro.
He has no idea what history has shown. Because every single time somebody like this comes on and says, come on, Paul, it's not going to go down. Guys, Amazon went from 107 to 6. The best, literally probably the best company in the world right now. At one point in the dot-com bubble burst, went from 107 to 6. 107 to 6. You'd be like, and you're going to sit there and say, yeah, but look what happened.
Yeah, and
Great.
it won't do it now.
If you bought every .com company back then, you only doubled your money over 20 years, and that's with Amazon going from 6 to backed up to 3,600. If you bought every .com company, because how many of them went bankrupt? That's the story you're missing. That's the story you're forgetting. Is even with Amazon, Apple, and Microsoft, you still only doubled your money. They made up 80% of that doubling. That's 3% a year return over 20 years by buying stocks like this and buying tons of them. So theoretically, it's more diversified. Go on.
Okay. But anyway, so my base case scenario just lowers their penetration worldwide, but it's still bullish. 15%. That's still more than Toyota's doing today. All right, let's look at
His
what
base
Wall
case,
Street
by
is
the way,
projecting.
base case, if you buy 30 companies at base case, 15 or 20 or 25 of them should not go below that. If he bought 100 companies like this, 99 of them would go below that.
I love how his base, whatever.
He's using the terms that
Oh,
other
he's-
value investors use.
I see.
Wall
Base
Street
case, and
is
it's gonna
projecting.
be the biggest company in the world.
Yeah.
Bigger than Toyota.
I
which has done it
backwards
forever.
engineered this a little bit, so let me start with what they thought with, or started with. Wall Street is projecting a consensus estimate of $389 billion in total revenues for 2030. And then they start tapering off after 2030. They actually think Tesla revenues will start declining in 31, 32, and you won't see growth anymore. You'll actually see shrinkage. And nobody likes to see shrinkage. Nobody. But anyway, if we kind of reverse engineer how we could get to this consensus, which, by the way, Wall Street estimates range from about $250 billion in revenue in 2030 up to $600 billion in 2030. So at $1 trillion in revenue, in my bull thesis, I'm pretty high. I'm potentially a little overly bullish. In my base case scenario, I'm
Potentially.
also high. I put them at $754 billion, but that's because I think Wall Street misunderstands Tesla.
And by the way, Wall Street
and I don't
tends to
agree
be
with other people.
way too high.
Wall Street misunderstands.
Wall Street tends to be way too high because they probably have some sort of incentive to go give higher numbers because they don't want to look stupid when all their clients are going, why are you not buying Tesla? It's up to 1,000% in the last year.
And just like he's a cheerleader, Wall Street's a
Do
bunch
me a
of
favor.
cheerleaders.
Go back to history and tell me the last time on a pick 100 companies from 10 years ago, see what their consensus were for 2020 and see how many of them hit it. Because guess what? They didn't even hit it for Amazon. They were still too high on Amazon.
It might be an interesting video to look at. Yeah. Here we go.
Estimate. So anyway, if we go with Wall Street's numbers, so this is Wall Street's consensus estimate, and we give them a 70 times earnings multiple in the future, this would be about a $1,700 stock, which if you buy it today at $700 gives you about
Pause.
a 9.
Still a 70 PE. Guys, no company. You guys all preach high PE because there's a lot of growth potential. How are you giving a high PE to a company that has $1 trillion in revenue according to him?
They're already he's already showing they're the biggest car company
And
in the
he
world.
even says there might be decline for them. Guys,
that should be
it's
a PE
totally
of-
counterintuitive.
What PE are you looking at? 20? 15?
15.
15, that, yeah.
It has to be because it's the biggest company in the world. What
It
are you going to grow
can't
with?
double the next
Yeah.
year.
It's not
You
going to
can't just keep
double.
It's not
It's
possible.
going to take forever.
Right.
I believe that growth should get a higher value. This is insane.
Return. You could probably, if this ended up being true, you could probably do better elsewhere. Start with a smaller company. But
Probably.
I want to know what Tesla's thinking. So in order to know what Tesla's thinking is I want
we
to do
stop
some
with this now?
gigawatt.
Because I don't care what Tesla's thinking.
Your final take.
There is no logic behind this whatsoever. It's the exact proof that assumptions are everything, and he's just making. I'll make a $60 trillion assumption. There's my bullish case. It'll be a $60 trillion company, and we'll do about 200 PE. So really, if you buy it right now, it should be a $60,000 stock. You're welcome.
Sounds great. Sounds like Bitcoin.
And it's true. I said it on the morning show yesterday. People like this need to get hurt. They're going to get hurt. And
people
to be honest with you, people that are cocky like this don't understand.
Well, in the comments, they'll say you guys are wishing ill will.
But
I mean,
I am wishing. By the way, I
wishing
100% wishing ill will for people.
And I said it on my
who do
morning
this.
show yesterday. I am wishing that because that is what needs to happen.
Unfortunately, we only learn from bad times.
That's
We
true.
only
I've told you
learn from
multiple
bad
times. The trades that I've learned the most on are the ones that I got hurt the most on.
That's true. Yeah, you burn your hand on a scalding pot, or you're not going to do it again.
But clearly, I'm not learning. I'm still short the market.
Yeah. All right, Paul, Mo, thanks. That is our take on Meet Kevin.
Plus, we have the bald spot showing in this.
I would say, again, I in private, I talked to Paul and I said, I wouldn't want to piss off too many people because one day they might come calling and want to collaborate with us. And
my goal now, and I'm gonna go crazy. My goal is to be David Portnoy of the financial world. And he'd probably, if he ever saw that, which he's not going to see it, he'd be like, what an a-hole, this guy sucks. And the reason being, he says whatever he wants, how he wants to say it. I'm just going to say it. This is how I'm going to be, and you make your decision by voting for me. How do you vote for me? Subscribing or joining our Patreon, where you get the software for 80 cents a day. You decide.
That's our take. Love you. Love you patrons. Fondle that thumbs up on the way out, or the thumbs down. And argue with Paul in the comments.
Oh, there's going to be a lot of thumbs down on this one.
We love you.